Well, good morning, everyone. Welcome to our Tuesday morning trading session. Hang on here just a moment. I'm just finishing loading my trade manager onto my charts, so bear with me just a moment. It looks like it's a pretty soft start to the morning today. Steve already reminding me of the PMI report due out in about 15 minutes time, and consumer confidence report at the top of the hour, which explains the rather sideways nature of the market. I like to give the market a few moments to settle in anyhow. And since this is a Tuesday, it's also going to be one of our Raptor trading days. We're going to spend a little bit more time looking at the Raptor today for you brand new Raptor owners. We've already gone over the fundamentals of the Raptor, but what I would like to address today is kind of a little bit of a review, as well as looking at things like market context. So I got a very interesting question from Ron yesterday. You don't need to worry, Ron, nobody knows you. But Ron was saying, I was watching the trade room this morning, and things didn't work out that well for me because the market was so sideways. I find choppy markets are the most difficult to deal with. I'm wondering what you think when you find yourself in a day like today, meaning yesterday. What would you advise a new trader to do when there does not seem to be any follow-through? All right, excellent question. And a problem that plagues every trader, really. Okay, first off is identifying when you are in a sideways market. The problem with trading a sideways market is it doesn't always look like a sideways market until you're in it. If you find yourself in a sideways market, your objective should be to minimize your exposure. And perhaps even getting out of the trade as efficiently as possible. So what does that mean? Well, that means you're going to need to manage your stops more effectively, and you're going to need to perhaps take a look at taking profit on target. Now, yesterday, it wasn't a stellar day for me either. I ended up staying in the red for the day, but it was a small loss. I think all told it was around $200 loss. So it's, those kinds of days aren't going to cripple you, even if you have a small trading account. I could have easily turned that $200 loss into a $200 winner, or at least a $100 winner, if I had taken my profit on target. So if you suspect that the market is drifting, if the market is sideways, really consider taking profit on target. If you miss a big move, you miss a big move. But the simple act of taking profit on target can make the difference between having a losing day and having a winning day. And I think we would all agree a small winner is still better than a small loser. So when the market is starting to go sideways, as it was yesterday, we see a day where there's very little follow through. So we get a signal to the short side here, pre-market. The market opens up down here, and it starts to bounce up. And I have the initial balance lines on my chart, but you can easily just plot the high and low of the first half hour of trading. That's what is known as opening range. And it kind of gives you a feel for how active the market is going to be that day. You can see that today, or pardon me, yesterday, we had a very, very tiny opening range. This was our opening range right there. Just because the market has that kind of opening range, of course, does not mean that it's going to stay within that opening range, but it does kind of give you a feel for what type of day it's going to be. Small opening ranges tend to mean congestion. Bigger opening ranges tend to mean the market's going to move a little bit further. So we come back, we produce a number one signal. Is this signal worth taking? Yes, definitely. It's one of our high probability signals, but at this point, we don't really know that the market's going to be more of a sideways day, but we do get a little bit of a clue with that smaller opening range. So we get our number one signal to buy. If we decide to take profit on target, they actually came up short. I was going to say we'll probably hit our profit target. I think they may have hit the break even here, but even if they didn't, what we want to focus on now is managing our trade more efficiently. Right? Anytime you get up to a high probability profit target and the market does not get you there, you should consider as well that, well, maybe the market is not having that kind of follow through. If you happen to have the hawk, I really like the hawk in that it clearly shows when the market is sideways because you get a lot of yellow bars printing. And of course, we can rely on our things like the first micro-macro cross signal, which we know is a very powerful signal. This, by the way, more or less coincides with the number one signal on the Raptors, so don't think you're missing something. You Raptor owners, you've got this signal right here will tend to coincide with the first micro-macro cross. Again, very high probability signal. Should find its profit objective. Now, admittedly, in the Falcon, we have a bigger profit target than we do on the Hawk. But I'll talk about that in a second. So with the Hawk, if we're looking at the Hawk and we have these first micro-macro cross signals, and they're not at least following through to our high probability profit target, then I consider, well, maybe the market's not acting right. But you can see we had a slight upwards drift. We had a first we had a macro pullback right here, which we tried out of the open, came down, hit its high probability target, came back, and then we started reversing and heading the other direction. Okay, so how do you trade a choppy market then? Well, like I say, you're going to focus on taking profit on target, and you're going to try to react when the market starts to move against you. Right, so once you get into a trade, if the market starts to reverse on you, you're probably going to take some steps to adjust your stops a little bit more quickly. Now, what I like to do is I like to see the market recommit. I try to give the buyers at least one more chance to get their act together. And you can see here we're now starting to produce a number two signal, which is actually counter trend, which we should not see after our with trend signal. So that's another clue that maybe the market's starting to get a little bit sideways. When I get that kind of thing going on, right away I'm thinking I should be doing something with my stop. So ideally I'll get one more bullish bar. There it is. Now I can start to bring my stops up. So I'll bring my stops from here to here. If the market reverses on me now and takes me out, okay, that's what I would consider a good loss. But you can see my initial risk was 250. If I get tagged here, it's going to be, well, well, certainly less than 100, maybe $80, which again is not going to be a deal breaker. When I see this reversal, again, now I'm expecting the market to be a little bit more cooperative, right? If the market is moving in my direction, or it should be moving in my direction, otherwise I should consider the fact that I'm wrong. I read a very interesting post at a forum where the author put it a lot more succinctly than what I just did, but he essentially said the biggest difference between a professional trader and an amateur trader, or you can look at that as a way of saying a trader that makes money versus a trader that loses money. He said the biggest difference is not the signal. Professional traders don't have an edge on the signal, or winning traders, traders that make money, don't have an edge on the signal. What they have an edge on over the traders that lose money is how they manage their trade. I'll let that sink in for a moment, because it is so true. Amateur traders, they are very quick with their stops. He made the point that professional traders always try to catch a big breakout move. I don't always agree with that, but I do agree with the point that he made that amateur traders, or traders that tend to lose, don't have a plan to manage their trade. Right? They're always really, really quick with their stops because they're afraid. They're always trading from a position of fear. That's why this amount here has to be an amount that you can afford, so that you're not trading from that position of fear. That you can let the market react, and you can move your stop here, and if you get stopped out, you say, okay, well, I got stopped out. If I don't get stopped out, well then, hooray, the market may go up and hit my profit target. Let's see what happens next. So the market comes down, makes one more reaction, and now if it reverses from here again, well then, I've done the best that I can do given what the market is doing. And it starts to go up, and right now I can probably get my trade to a break-even type scenario, and hooray, I even got to my profit target. Somebody will have to remind me why I didn't do that yesterday. Okay, so here we are today. What kind of market do we have today? Exactly. Thanks, Jeff. Jeff's playing. We got a sideways market. There's no question. You can see here's our opening range so far, teeny tiny opening range, very, very sideways. So today's the kind of day we're probably not going to expect a big breakout. We're probably going to take profit on target. We're probably going to look at keeping a wider stop to start. Here's our number 2 signal that just triggered. So the number 2, we need to have a trend. Yeah, all right, it looks like we have a little bit of an uptrend. Maybe taking a second push on the signal is a good way to deal with a day like today as well, where you allow the signal to engage. Choppy markets, remember, tend not to have any follow through, so you have the luxury of letting the trade engage the signal and then look for a possible reaction. I might go in a little bit lighter. It looks certainly looks like we're testing the highs, right? We're testing the highs, not getting much follow through through the upside, not getting a lot of follow through to the short side either. Yeah, there you go. Thanks, Clayton. Clayton says you were training, which is why you didn't get into profit yesterday. There you go. I will go with that. Good question. Mr. Buckaloo asks, Eric, when it's choppy in the equities, do you ever consider the 6E or the 6B? Yes, that's a good plan too. There's a lot of markets to trade. You don't have to stay with a choppy market. That's maybe that's the easiest solution. Okay, so here we are. We're short on our number 2 signal. And we're about halfway through our opening range. And again, the market's a little sideways here, so I didn't go in quite as heavy. And I'll leave my profit order in play, even though I'm always tempted to try to catch a runner. One thing that I remember I mentioned to Ron as well is when you start to encounter a lot of sideways markets, a lot of sideways trading days, that tends to happen before a market reverses. So if you look at the dominant trend on the NASDAQ, I'm just going to build you a NASDAQ chart here. Okay, so here's our NASDAQ. Oop, 1 minute. That's not what I want. Okay, so here's our NASDAQ chart. You can see the last 3 or 4 days, 5 days even, well, actually more than that, the last week and a half, very, very sideways trading. Right? We got this kind of sideways thing going on. This tends to happen before we get a reversal. Happens right here before we got this little reversal. Happens right here before we got this reversal. Did not happen here. This was just leading to the next breakout. But you can see most times you get some sideways trading and the market tends to reverse against the dominant trend. So that's something to keep in mind also. So when you're in a market, when you encounter a market that's really, really struggling, kind of make a note of where the top end of that trading range is, because you should favor selling if the market gets toward that top edge. And that's kind of where we're at now. At the 53.50 mark, you can see the top end of the range around 53.40. or pardon me, that's the other way around. We're at 53.40, the top end of the range around 53.50. We may favor some selling, a move to the short side. Okay, that's interesting. Clayton says my system is triggering a stop out without hitting my stop loss or profit. Any ideas? No, that's very odd. Sounds like you've got a market order hanging somewhere. Try this. Right-click on your chart, not while you're in a trade, but after it's closed out. Try to reload your Ninja script. What that will do is reset your trade manager. Christian asks, hello Eric, any new information about starting with NinjaTrader 8 and Raptor 2 or DTS? I do believe the programmers are working on it, and their schedule was for the end of the first quarter, so hopefully by the end of March. Tom is asking, when you mean reload Ninja script, do you mean to exit Ninja and reload, or do you mean to clear the data cache? You can do both. Usually when I'm already working like this, what I'll do is I will go reload Ninja script, and what that does is it reboots your trade manager. See, it asks, reloading Ninja script will stop and restart your running strategies. Do you want to proceed? That's referring to the trade manager. Yes. And it will reload it. That should solve a lot of your problems. If it doesn't, then yes, you're right. You may actually have to exit your NinjaTrader and open it up again. All right, we're getting a decent start to our move here. Oh, almost to the break even. I'm going to force it to break even. We're only a tick away from my break even trigger, which is 3/4 of the way to my profit objective. Okay, good. Yeah, Clayton says that fixed it. Good question. Jeff asks, are the other indicator warehouse indicators ready for Ninja 8? That I don't know. You would have to email Adam, and it will let you know that Adam is in the middle of a project, so he may be a little bit tardy getting back to you, but he will reply to your email. You can always email Ben as well. Ben should know, and Ben's email is support@indicator warehouse.com. Ben, of course, one of the fellows in charge of doing all that work, so he would know. Come on, keep going. You know you want to. Really? I wasn't aware of that. Christian says, after the problem with FXCM in the USA, they're banned from the CFTC, I come back into the future 6E and the NQ and I feel a warm welcome back here. Well, it's good to have you back, Christian. This is another clue about a sideways market too, is just the way they're dragging their feet. Yeah, see, now they're going to come up and tap me at break even. Stinkers. Another clue, if you haven't recognized that the market is already sideways, is you get a lot of overlap. That's a sideways market right there. Here's gold on the Raptor. That's a very, very sloppy hard edge bounce. And the reason it didn't print is because our band went a little bit out of sync here. But it is still a hard edge bounce. We'll see if they come back and give us something a little bit more palatable in the hard edge bounce department. I would be interested in buying gold. Just keep plodding higher day after day. The other thing with the sideways market that I go over all the time as well is when you recognize the market is sideways, just let it get outside the range. Let it break out, prove that it can stay out, and then look for that signal to get in. All right, I think I'm going to get tapped here in a second. Clayton asking, Eric, I have still not figured out what to do with the break even. How do you use it? Well, the break even, of course, is pretty self-explanatory what it does. It brings your trade to break even plus whatever amount you have right here. So currently I have it set at break even plus one tick That's the default. I can protect as many ticks as I want, or I can even go into negative ticks. I bet a lot of you didn't know that. So what the break even will do is it will force your trade to break even, providing your indicator is enabled. Your trail indicator button is enabled. So I had to make sure my trailing stop was turned on. That activates the break even button. And when I hit the break even, it automatically took my stop from up here and brought it down to break even plus 1 tick. So you can see I got a whole $5 profit, but beats a loss any day. Now you can also set up auto break even. And I'll show you how to do that in a second. Okay, just had to jot a quick note in my journal. To set your auto break even, right click on your chart, go to your indicator window. Oops, no, sorry, my mistake. I forgot we're dealing with the trade manager. That's a strategy. So right click on your chart, go to your strategies window. Select your trade manager. If you already have your trade manager on, you're going to need to turn it off. So go here to the Enable tab, click False, that's going to turn it off, apply it, and your trade manager disappears. That means you can make changes to it now. Near the very top is the auto break even parameters. If you do not have your auto break even turned on, this is going to be set to false. So first thing you need to do is turn it on. Go to true, and now you can preset your break even trigger. I like to have my break even about 3/4 of the way to my profit objective. So if I'm running a 20 tick profit target, and I figure if the market gets 15 ticks there, it should go all the way. Likewise, if I'm running a 10 tick profit target, I'll probably have my break even set at around 7 or 8 ticks, right? So anywhere around 75, 80% of the way to your profit target. Then you can preset how many ticks you want to protect. By default, it's set at 1. When you have everything set up the way you like, turn your trade manager back on. Remember to click apply, and now you will have an automatic break even button or automatic break even trigger in your trade. So once the trade goes live, so this is how our trade was set up. Once the trade went live, we had a auto break even right down here somewhere. The market came down, oh, I guess it was a little bit deeper. Almost touched it. It was close enough for me that I forced the trade to break even, and then prices came up and tapped me out at break even. It's really just a way to control your trade. To try to get a handle on your stop if you feel like today the market's not following through, or there's a chance it's not going to follow through. Almost gets to your profit target but doesn't break even. Or close it out. Just grab whatever profit you happen to have. Oh, shoot. And while we were doing that, gold kind of gave me that number one signal that I was on the lookout for. So I'm a little bit late, but I do get a chance at a second push. So I'm a little bit late. Oh, and they actually slipped me a tick too. What's up with that? Okay, it looks like we're doing pretty good trading around the reports. It would have been nicer to pick it up a few ticks early, but I think we're going to be all right. I wanted to get out of the trade before we got to this resistance line. But I think we're going to be okay. Better get my mouse out of the way so the market can go higher. Don't want to block their path. So they're getting a little fidgety near this high right here. Obviously a little bit of selling going on. If we break out above there, I would like to get a little bit more aggressive with my stops. Start rolling them up a little bit. Come on, gold. Yeah, this whole 1259-ish area, a little problematic. Oops, my mouse is in the way again. No wonder it can't go higher. So what I'm looking for now is the next swing up and a chance to roll my stops up. Okay, Tom asks, I'm a little confused on what the break even means, being that you can use offsets. What relationship does it truly have to break even? Are you currently using it on your gold trade as an initial profit point? All right. I can set the break even to be truly break even. Right there. I have it set at break even plus 0 ticks. But the break even function also allows you to capture positive ticks, or if you want to keep your stop a little bit further away, negative ticks as well. Like, what this will do is once I click the break even button, it will roll my trade up to, or it will roll my stop up to break even minus 7 ticks. So no, it's not truly break even at that point. Think of it more as a management tool, a way to manage your stops. So if I wanted to go to break even and I want to protect 1 or 2 or 3 ticks, so I at least have enough money to cover my commissions and fees, then you can say, well, that's truly break even because you're not out of pocket anything on your trade, are you? So that's another way to look at it. Now this value right here, this is my auto break even trigger. You can see that once it goes live, I can move it wherever I want. I can put it right there now if I wanted. I'm going to still leave it a little bit further away, but watch, hopefully gold will go higher here, but watch what happens when we get up here. Watch what's going to happen to my stop. Yeah, I think I'll be okay. I'm going to enable my stops. All right, so now Trade Manager is controlling my stops. When your stops are, on the same as these dotted blue lines, Trade Manager has control of your stops. So that means when the auto break even gets hit, it will take my stop from down here and roll it to break even plus 1 tick, because that's what I have it set at. Yes, Tom. So Tom says, if it's hit, then all your units on the trade are closed. That's correct. So, and you're correct too. He says, oh, I see. It must be passed, and then if it comes back down, then it triggers it. Is that it? Yeah, that's exactly right. I see where you got the confusion now. Yeah, so we'll watch it go up here. If it hits the trigger, then our stops will come up here to 1258.2 because my entry is 1258.1. We're trying. We're taking our sweet time today on everything, not just the NASDAQ, but gold too. My goodness, get up there. Going on with the NASDAQ? We're still in the same neighborhood, haven't moved. Okay, so this is the second time we're here at this 1258, 1259 area. We've got to do something this time. Now let's say I'm watching this and I'm starting to get a little bit anxious about the trade, and I'm thinking, no, this isn't going to go. I can hit my break even. That will bring my stop up to break even plus one tick. Or I can just, I got $50 there. I can just hit the close button and take the money. I'm going to wait and see if they can get above 1258 though. Get up there. Well, I guess 1259. They're already above 1258. I got to get above 1259. This would have been easier entering down here at 1257.5, because then our target would be 1259.5. That would be our profit objective. And gold is one of these markets that I do tend to double the profit objective on. Typically, our profit target is only 10 ticks, or pardon me, $100, which would be 10 ticks in gold. All right, let's see what we've got going on here in the NASDAQ. A very sloppy, very premature cloud crossover. We're getting a macro pullback here in the hawk. Oops, there we go. Yeah, I don't think I'm going to go in that heavy. We'll just throw a onesie on here. Actually, I'll risk it a little deeper. Come on, gold. Let's go. I hate influencing the market for my own personal gain, but come on, we're just going to have to give you a little bump so you can get above 1259, because I need to show Tom how the break-even trigger works. Come on, get up there. This one I'm going to try to run out. If we fill here on the short side, I'm going to try to run this one out. And the reason I'm doing that is if we are in a sideways range, we kind of had the breakout, now we're seeing the retest. So there's the breakout. Here's the retest. If it comes back out, it should try to stay out. dare bring me in if you're not ready to head lower. All right. So they slipped a tick on the fill, which is suggestive of a weaker market as well. And we'll watch the break even on this one. So let's see, we sold the hawk. All right, so we should either see the market head lower here, hit the break even. That will automatically snap my stop down to here, to 53.41, which is 53.41 quarter plus one tick. Oh my goodness, gold is being difficult this morning. Okay, so here's the hawk. Come on, hawk. Get her done. Let's go. See, right now I'm one tick away from my break-even trigger. This is the time I would force the trade to break even, but I'm going to try to let this show you how the auto break-even works. Oh, you guys. All right, well, you see where we're at right now. I'm going to force the trade to break even. Oops, I forgot I need to enable my stop strategy. Oh, and now I can't because I'm past it. There we go. There's my chance. So I'll force the trade to break even now because I'm not getting the follow through. This is a reliable signal. I should get some follow through. So the lack of the follow through, maybe I'm getting a little bit itchy on the trade. But I don't like it when the market brings me in and then does not follow through. All right, so I took a break-even stop out, and again, it's break-even plus one tick, so I managed to gain a whole $5 on that one. and gold just paralyzed here now. Looks like they tagged 1259 and then moved away from it. Oh, thanks, Joe. Joe says, hi, Eric. Joe to the rescue. I'm about to sell my 1,000 contracts. Get rid of those pesky buyers. Thanks, Joe. I knew I could count on you. Hurry up, would you? A thing to remember too, when you do something like the quick break-even roll that I did there, I'm going to pay attention to this now. And if it continues lower, I'm going to make a big star in my trading journal, say I was too fast on the stop. So that maybe I'll finally learn that sometimes I need to hold my stop back a little bit. We'll stay with the gold trade though. Get above 1259. Come on. Come on, get up there already. Get over 1259 for crying out loud. Maybe you're right, Joe. Joe says maybe the market's waiting on Trump's speech tonight. Could be. Come on, let's go. Get up there. Well, that's true too, Clayton says. It's not like people don't know what he's going to say. Yeah, I suppose you're right. There's no real surprises there. Oh, man. 1259. What a line. I'm going to hold my stop back just a little bit. I don't want it to roll just yet. Let's see what's going on here. Well, we would have trickled down. I did delete my profit objective. We would have hit the auto break even, and it looks like I would have got tagged at break even anyhow. Now we have a little bit of a test of the extreme, a teeny tiny test of the extreme. Good question. Jeff asks, is there any way to be long and short the same futures instrument at the same time? Yes, but you need to set up separate accounts with your broker. So you would have, let's say, one account for your DTS tools and one account for your Raptor tools. Or if you only have the Raptor or the DTS, you can set up two accounts. Just make sure that the number in your account window is different. Now, some brokers may give you a hard time about setting up more than one account. They shouldn't, really. It's not that big a deal. Another thing you can do, if you're just trading one account, is you can trade a similar instrument. I've done that in the past, where I might, say for instance, be short the NASDAQ and I see a buying opportunity, so I'll go long the E-mini or the Russell or the Dow. Although, as a rule, they do tend to move together. Darn it, now gold is starting to trickle back a little bit here, hunting for some support. Come on. Gold wants to rally this 1259 line. What a hassle. If we got above 1259, I think we'd be in pretty good shape. But right now, they're really dragging their feet. Um, what's going on here on the NASDAQ? Not much. Going to see probably a little bit of a rally, I would think, off of these morning lows. We'll see whether or not they can press a little higher or whether or not they are going to keep fading. Man, I can't believe gold is this slow. There's times gold will just explode. Oh, I got my mouse in the way again. So this will be the last chance for me for the buyers. If I can get another bar or two in my favor, I'm definitely going to bring my stops up underneath here. Wow. Okay, come on. Let's get going. There we go. Okay, so I got at least one bar in my favor, and there we go. That's all I'm going to give them. I'll go a couple ticks below there. But they got to get busy now. Come on, keep going. Joe says, are my 1,000 contracts finally working? Oh, I think they are. A little bit of a trickle down here. didn't exactly blow the bottom out of the market, but it's something, a little bit of a slip. Boy, gold is really making me earn this. Alright, so the parabolic's sitting around 1258 half. That could be problematic. Hey, way to go, Tony. Tony says I picked up a number 3 hard edge bounce in the 6E. So that paid off a little while ago. And we're getting now a hard edge bounce in gold. I've gotten a little bit more aggressive with my stop strategy. I've now using the bar high-low strategy. And this really is the last chance for the buyers. They got to get a push going on here. See, the buyers will tolerate one pushback against them. If the trend is really strong, that's usually all that they'll allow. Then the second pushback, it's like, okay, enough of that. And then the buyers start to follow through. Ay, 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 ay. Give me a break. All right, I'm going to go break even. There we go. That's all they get. Clayton asks, what's the price per tick on gold? $10 per. It's actually a pretty reasonable market to day trade. The only downside with gold is if you find yourself on the wrong side of a move, it can be very, very quick. I'm just going to try to find you an example here. All right, so note the timestamp down here. Look what happened within a few seconds during 8:14. That's a very, very fast move. Doesn't tend to happen so much in the overnight. Rather, the North American session, you can get some very quick moves. This was another one. So from 640 to 641, prices did that. Which is good if you find yourself on the right side of the trade. And it looks like taking the break-even stop out was the way to go. Market totally turned around, gave us a counter trend signal. And we're going to put that back on the shelf for now. Just making a couple notes in my journal while everything is fresh. All right, well, we'll stay back. With the NASDAQ for now. Yeah. Yeah, Clayton says this is slower than molasses. It is. It's a very slow market today. Slower than molasses in January. Uphill. Wow, here comes the eagle. We may finally be getting an in-sync signal with the eagle. Yeah, it's that kind of day. Joe says, I'm going to pack up my toys and go. Out at break even after being 3 ticks short of my profit target. Yep, that's the kind of day it is. So the sellers had their way for the first hour and a half, and now it's almost as though the buyers are going to come back. We've drifted into the hard edge here on the eagle. We've got a warning dot. We might produce a buy signal. look at the gold roller coaster. So we were long from, well, this was the signal we were long from. Followed up with a number 3. We took the break-even stop out, got a number 2, which fell off sharply. And now we're right back to where we were, this whole 1258 area again. That's going to be an important number tomorrow. You may want to jot that one down, you gold traders. Well, boys and girls, I'm not sure we're going to get another signal here. It looks like the Eagle's going to come through with a buy. Yeah, thanks, Clayton. I think I may just do that. Clayton says, I'll see you tomorrow, brother. Go have breakfast. that, that does seem like a good plan. All right, boys and girls, we're going to wrap up shop here for today. I will see you again tomorrow morning, and hopefully the market will be a little bit more active. But overall, we did not do badly today. Not huge winners, but at least we're not walking away with a big stinker either. All right, see you tomorrow then. Bye for now.